Okay, well, last week was some pretty serious sector rotation in the market as investors were kind of rotating out of the mega cap tech stocks, which have been the clear winners over the last few years, and into some of these areas where it's expected that they will do well as interest rates decline, mainly some of your more value oriented kind of stocks. So you saw the Dow do really well, and you also saw small caps just really shoot up last week, and those have been the real laggards. So definitely in the midst of some sector rotation going on here. So let's take a look. This is your market in minutes report. We're looking back on July 15th through the 19th, and I'm Mike Minter, Chief Investment Officer. And so let's get into the numbers here behind this rotation. So as we said, the Dow did do well last week as we saw money flowing from the Nasdaq, which is this obviously the tech-heavy benchmark. So as investors were rotating out, you saw the Nasdaq come down pretty hard last week, down almost 4%. So haven't seen a move like that on the Nasdaq down in quite a while. And this is what also brought down the S&P. Obviously, a lot of those are, you think of the Magnificent Seven and some of the really kind of mega capitalization tech stocks are actually very, very heavily weighted within the S&P 500. And so there you see the decline in the broad market as well. So, but on the flip side, we had the Russell 2000 do very well. Those are your small cap stocks. And so that brings us to our year-to-date numbers, which are still very, very strong across the board. But this is the real eye popper, I think, is Russell 2000 up almost 9% this year. And this has been pretty much a go nowhere index for most of the year and actually, few years. So nice to see that reversal. We've been talking about that for a while, where when rates actually start to come down or are anticipated to come down, small caps should do well, and they have. And we are seeing a little bit of rotation out. Doesn't mean that the run is over in mega cap tech stocks. Could be just the opposite, but we are seeing some of this inevitable rotation right now. So rates relatively unchanged, not a whole lot going on here. Just across the board, mortgage rates pretty much didn't move at all. But in terms of the 30-year, 10-year, and 2-year, pretty much where we were. So let's take a look at kind of the story behind some of this, the sector rotation. So obviously the week began very differently than it ended. All three averages rallied over the first couple of days this week, with the Dow leading on both days. And Fed Chair Powell indicated the Fed may not wait for inflation to reach its 2% target before considering a rate move. So this kind of buoyed the markets. So then markets did hit a speed bump as investors appeared to take profits and rotated away from mega cap tech names, what we talked about. The selling broadened beyond tech related names on Thursday, as all but one of the S&P 500's 11 sectors did fall. Early Friday morning, global tech outage caused disruptions for businesses. That was a doozy. I don't know if you guys caught that, but CrowdStrike and a Microsoft update really upended systems around the world. Really, it was crazy. We were down for quite a while as well. But so business, governments, and financial institutions contributing to the weekly decline. So despite its losses in the second part of the week, the Dow finished in the green. So despite all the mess going on, we still ended up doing quite well. We did have some upbeat economic data. Again, very good news. All those stocks were under pressure. Investors saw some green shoots in a few economic reports. So housing starts rose 3% in June, and building permits also ticked higher. Retail sales were unchanged in June, which was better than expected. And investors were encouraged that consumers were still spending despite ongoing inflation. So all in all, even regardless of the rotation, which, it wasn't fun, I guess, for a lot of people, particularly those with larger positions in mega cap stocks, still ended up being a pretty good week, all in all, for the markets, in spite of the rotation. So key economic data, Tuesday, existing home sales, Wednesday, new home sales in service of business uncertainty, and Thursday, GDP, durable goods, international trade and goods, and jobless claims, and Friday, personal income and outlays and consumer sentiment. A lot of companies reporting earnings. We're in full earnings season here. Monday, Verizon. Tuesday is Alphabet, which is Google, Tesla, Visa, Coca-Cola, Texas Instruments, GE Aerospace, Philip Morris, UPS. And then Wednesday, we have International Business Machines and AT&T. And Thursday, AbbVie, Union Pacific, and Honeywell. So a lot going on this week. We'll report back to you next week as always. And hope you guys are doing well. Here is all of our contact information should you need to get a hold of us. Hit that subscribe button down below. We'd love to have you get all of our videos as they come out. And beyond that, guys, have a great week and be talking to you soon. Thanks.